Hello viewers, welcome to this weekly Nifty technical analysis. So in this show, I analyze Nifty based on various technical indicators and see how the next week ahead looks like. So without any further ado, let us get to the analysis part. So this is the Nifty weekly chart. So as you can see, the previous week formed a very strong bearish engulfing of all the three previous week candles. So I'll draw your attention to this. So this was the all-time high level, after which we had a bearish penetrating candle which triggered the downtrend. So that was followed by a series of three candles, and then there was some consolidation that happened for almost a month, and more than a month, after which there was a strong downtrend here which could not push the price much below the or lower than that. So the support played out from this level, or we can even say from this level, but let us say this level because this is the bottom of this candle which broke out of the consolidation range. And after that candle, so this corresponds, as you may know, this corresponds to the budget session and the Hindenburg crash. So after this, there were 3 weeks of kind of bullish momentum. So okay, this week is this one corresponds to the budget highs and lows. Okay, this was the week before that, the end, last week of January. So there were 3 consecutive attempts by bulls to push the price up, to push the index up and above this consolidation range. But now, as we can see here, this week, even though the volume was not very high, it eventually closed below the opening of this candle, which was the um, first candle which triggered the bull run after the crash. So now we have a close below this candle, below the opening of this candle. So what does this all look like? So on a larger level, the bearish trend which started from the all-time highs is still intact, because here we had a strong support which should have pushed the price higher. That didn't happen. It hit a ceiling here, which is almost the ceiling of this consolidation range, and then now we have a strong push down without any major support week. So if you look at it the other way, had this candle closed somewhere here with a long support wick, then probably we can think that the support is still playing out and there may be some bullish sentiment left in the market. But now that is not the case. The week ended with a very small shadow at the bottom of the candle, and there was also not much of a wick or shadow at the top of the candle, indicating that this is kind of a belt hold line, which means any bullish effort now will face stiff resistance from around this area, 17,800 and above. Even though if at all a bullish attempt comes now, also it will face stiff resistance. So now, what is the picture ahead, the weekly picture? So for that, we'll move on to further few more technical indicators. So let us look at this picture. So here we have this one. The pink line is a 50 simple weekly average, and the green line is a 100 weekly average, and the brown line is a 200 weekly average. So forget about the 200 weekly average for now, because that's not going to come into picture anytime soon. So earlier here, when the market fell from previous all-time highs, so we had a fall from the previous all-time highs, and market took support from the 100 weekly moving average, and then it created it again took support near the 50 weekly moving average, moved up and created a new all-time high, and now it's falling. So now it is falling, and now it is near the 50 weekly moving average. It did not test it yet, but it is close to that. And we have a 50 weekly moving average and 100 weekly moving average also converging. We don't know when they will do, but they're coming close together. So how does this all look like? So one thing, on one hand, we don't have a test of the 50 weekly moving average yet. But the candle that is approaching the 50 weekly moving average is not showing any signs of support, because here there was some support which got invalidated because of this candle now. So the next candle can, there can be several possible scenarios, but the highly probable ones are, if at all the bearish sentiment is so strong, we may see a gap down below the 50 weekly moving average, that is a gap down below 17350 level. Okay, this is a one of the possibilities. I'm not saying it's going to certainly happen, but this is one of the possibilities. And in that case, if the gap down happens to be below 17340 level, we can safely conclude that this is going to be a runaway gap and may not be filled soon enough. So it will eventually may break the 100 weekly moving average also. However, if the gap down, if still a gap down happens, and if it is not strong enough, and if it gap down happens to be, let us say, if the gap down happens to be above the 50 weekly moving average, then we may see a test of this, and then probably a small push up. And again, this is like, no, we don't cannot predict this. This is just one scenario. We may see a test of weekly moving average if the price opens slightly above it, and then it may go up. If the bearish trend is strong enough, then it might still end up above this consolidating, or it might break. So if it breaks, then this is how it will look like. Let us say it might break like this with a rejection wick indicating strong bearish trend. Maybe there may be a small support wick also. In this case, the bearish the downtrend or the bearishness is still strong. We can conclude that. Otherwise, if the candle happens to be, let us say, this way, either this or like that, slightly like this, then we have to be a little cautious. There may be a sideways trend, or maybe there can be slight say like 1 or 2 weeks of uptrend. So it all depends upon how the price action will play out in the next week. But if the gap down is strong enough, and if it is below this 50 weekly moving average, we can safely conclude that it is going to be a runaway gap. But if it is not so, then it gets a little tricky. On the other hand, if the week opens, let us say, slightly above, say anywhere at 17,500 or above, then there may be, because of the higher opening, there may be some bullish action, and the week may go up. Eventually, if the bearishness is still strong in the market and the bears can push the price down, then it will fall. It may fall and break the support also. In this case, then obviously we can assume that the bearishness is strong enough and the bear trend is going. I mean, the bears have the grip and the price will sustain more fall. However, if the price opens here and it plays out like this, let us say with a rejection week and a support from the 50 weekly moving average, then maybe you can expect one more week of consolidation, or the next week may break it. depending on that. And there is yet one more scenario where we may see slight sideways trend. Wait until this 100 weekly moving average and 50 weekly moving average also come closer together, and then there may be not this much, but let us say probably a 500 point or 600 point week where it will break both the averages together, both the supports. So that also can happen. So next week will give us a better picture, but overall, going by the present indicators and present trend, the trend looks like a downtrend which is intact, and the price seems to be, index seems to be moving down. But there are significant supports at this level which also we cannot ignore. So we have to see how this next week, the first week of March plays out. And taking another perspective, so this is so one thing, let me reiterate. Looking from the price action perspective, we are in a downtrend. The Nifty is in a downtrend, and the downtrend seems to be strongly established. And going by the candle, the next week also should ideally be a bearish candle. So the next week should close below than this, and we don't know how much deeper it can close, or how further it can crash. For that, when we look towards the moving averages, the scenario we see is that there are two supports close by. So even if let us say 17,350 is broken, price may not fall beyond 17,000, because somewhere near 17,000 we have a 100 weekly moving average which will offer support. So so far this is the picture. Now let us look at some other indicators to see what more we can infer from the chart. Okay, this is 100 weekly chart. All right. Okay, I will go back to the price action thing. All right, now I'll zoom out to give you a bird's eye view of the index starting from the COVID lows. Okay, so starting from this COVID lows, there was a rapid rise, small consolidation here during the first few months of 2021, and then a new all-time high was made. Okay, now after this, kind of almost up to the start of 2022, there was some correction. So most of them might have thought, okay, this is a safe correction, which is bound to happen from a very high level. So that was fine. But then index failed to create another all-time high after this correction, and it closed lower. So this was a lower low, which itself indicated a more further downtrend, and that got confirmed when we had a strong reversal signal here, and Nifty made even lower low. However, after this, Nifty kept rallying up to make a higher high. So all this is pretty much clear, right? Okay, but if we for a moment, if we pause and look at it the other way, here there was a strong uptrend, and where is the trend now? It is moving sideways in a consolidation fashion. So if going forward, maybe in the next few months, if this low is broken, okay, then we may see, it can happen several ways though, yeah, then we may see further down move, and it can be a prolonged one. Okay, and yeah, so I'll draw your attention to one more thing. So during this crash of the 2022, where do you think the support came from? I will give you a different perspective. Okay, let me draw a trend line. So let us start with the COVID lows, and let us place it at the 15,400 levels where Nifty took a U-turn. Okay, now see where it is all coming up to. So the budget week took a support from this trend line which offered support for the crash in 2022. So here, okay, this is one support. So we started the trend from here, and now we have an almost a break of this trend line, but it is not conclusive. So for it to have been conclusive, the close should have been much lower, but that didn't happen. So one way to look at this, if the next week opens, let us say at 17,500 level or so, there may be test of this trend line, and then if it closes lower like this, anywhere like this, or even here. Let me zoom out and draw a better picture. Okay, if next week happens to be something like this, testing the trend line and closing lower, it can be any lower than the previous close, we have a very good confirmation that we are in a prolonged bearish trend. On the other hand, if next week in whichever way, if it closes above this trend line and gives us a reversal indicator or something like that, then we may think that this breakdown is a fake breakdown, and the trend now is kind of bullish again. So in several ways, looking at either from the just the price action or from the moving averages and all other things, the first week of March is going to be very interesting. And yeah, so the other case is like looking at the supports, the first week of March may not give us a very strong indicator. There may be some hesitation, followed by some other, followed by a stronger indicator the next week. But these are the two most likely scenarios. Either we are going to have a strong directional indication from the first week of March, or the first week of March can be played out as a consolidation, and the next either in the next week of March we can have a good direction confirmation. Okay, and looking at this one, the other thing is looking at the present down move. So at a 1 hour level, as you can see, 1 hour level, the RSI is showing divergence. The divergence is not very clear, that I have to draw your attention to. I will point to this. Okay, here when it fell up to this point, RSI hit a very low level of 20. Okay, and the next day it opened and tried to go lower, but it failed because of this oversoldness, and it got pushed up, and there was a decent amount of consolidation that happened for quite a few hours, to almost toward the end of the day. And towards the end of the day, it made a new low, but see where the RSI is at that point. It was near 30, and it didn't make a new low, which is indicating a bullish divergence. And eventually that divergence played out, but played out with a higher opening. But due to the grip the bears had on the market, or due to the sentiment, negative sentiment, we made a new low now. But where is that low? It is still higher than this level. So if I'm saying, like, if the next week or Monday opens lower than this, and the RSI is showing a more bullish divergence, then we can expect some sideways movement to relieve this RSI oversoldness, or maybe that can go up slightly higher up to 17,600. And after that, if the negative sentiment is still strong and the bears have good grip, then it might fall. So even looking at this way also, we may see some consolidation early in the first week of March, and eventually the supports, the 50 weekly moving average and the 100 weekly moving average that we talked about here, and this support line also might break conclusively. Then we can conclude that we are for a prolonged bear market. So if this is invalidated and we see a strong bullish candle at this point, then obviously we may look at so that has to be very conclusive bullish candle. Then we can look at another short rally or a long one, depending on how it will sustain. So that is the outlook for the next week, folks. So next week is definitely going to be interesting, whichever way you look at it. And let us see how the market plays out and what we can infer from that week during the weekly analysis in the next weekend. So until then, hope you will make your trades with good analysis and manage your risk well, keep your capital safe. Hope you all will have a good trading week during the next week, and see you in the next weekend. Thank you.